What's going on, everyone, and welcome to Numbers Therapy. So a bit of background. We created Numbers Therapy originally to talk through the macro and bring on and showcase our experts in Metaverse HQ. And more specifically, so everyone can understand how all the big pieces fit together to make better decisions with NFTs and other investments using a balanced perspective, to learn about or from some of our people in the community, and to learn about different areas and opportunities out there, including different ways of thinking. More on Metaverse HQ, which we call MVHQ. MVHQ is the top Web3 trading and networking community, and we showcase traders, analysts, builders, and a variety of other rising experts in the space. GM, and welcome everybody to Numbers Therapy, episode 49. Today's episode titled, Annual Macro Roundtable 2 of 5, but technically SEC versus the world, of course, timely considering the events lately. We'll go through that. We'll go through several other things. Here at Numbers Therapy, we're talking through the macro, operational, financial, technical, trading-based, other dimensions of Web3 to help us all elevate and have some good laughs along the way. For everyone who's live, we have the guest questions channel. Feel free to drop your questions in. If they're intro questions, more advanced, we'll try to hit them along the way. And for anybody who's listening recorded as well, same questions will apply, so you'll be able to follow along with the episode. Lastly, Numbers Therapy is rated NFA, as in none of what you hear is financial advice. So, without further ado, and on to today's guest and episode. For those who joined a couple months back, an ongoing periodic format that we have in Numbers Therapy is a Macro Roundtable. All of our episodes, of course, focus on the macro and the current state, but we don't always get the chance to pull back all the way, review the current state and trajectory of the world, and place Web3 and the related tech inside of it. Today's episode is episode 205 of the Macro Roundtable for 2023, meaning we'll have 3 more throughout the year. And boy, it's definitely interesting times. So we definitely have a lot to talk about today. We have 2 guests today, and that will vary a bit in these episodes. For those in MVHQ, our guests today are pretty well known and loved. For those not in MVHQ, NGMI, though you're of course welcomed here. In one corner, coming from the fixed income side and often providing his perspective on Fed adjustments, interest rate status and trajectory, currency leadership, and of course, how it all intersects with Web3. In the other corner today, we have our resident cynic in a really valuable way with more of an economics bent, both on the rational and behavioral side. His blunt takes are always welcomed and have historically led to some great decisioning and some much needed intervention in some cases. Please, everyone, welcome Shaggy and Crocked to the stage, everyone. Shaggy, how you doing today?
Good. Thanks for having me.
Awesome. Crocked, how we doing?
Awesome. Thanks for having me.
Good stuff. All right. So this is going to be juicy today. Let's just pull up for a second and start with the current state of where we're at. So, that's obviously a huge question, but if we can just distill it in terms of the macro environment and in general, where are we at with the current world today, and what's your view personally on the near-term prognosis for how things are looking? And take that question however you think is appropriate. So, Shaggy, let's start with you first.
Well, I think the near term is a little bit different than kind of where we're at. And as you look over time, I tend to think of things in longer periods of time. I know crypto and NFT space thinks of things in very short periods of time. But clearly, if you look at markets, the equity markets have been doing quite well. It's been fairly narrow, being mostly the big tech stocks that have powered this rally. Interestingly, crypto hasn't really participated for lots of reasons I think we'll get into later. But if I take a step back and look at the big picture, the economy is still deteriorating under the surface. The Fed, while likely to pause next week, I don't think they're done raising rates. And I do still view a recession as inevitable. It's a matter of timing, but again, that's over a bit longer period of time.
That makes total sense. Croft, what is your take? Where do you think we're at right now? How do you feel like we're positioned? We don't even need to cross over to Web3 if you do or don't want to, but where do you think things are going? How does that look?
Yeah, a lot of similar views as Shaggy. Interest rates are still high. Unemployment's still low. Inflation is still high. I too think a recession is imminent. How fast or how soon that comes remains to be seen. I have spent my since I've kind of been away from NFTs. I've kind of been trading both crypto and kind of traditional markets. And I know, like Shaggy said, the traditional markets, the indices are up huge. I even read something yesterday that said it's the start of a new bull market. From my technical analysis background, I think we're near a bear market rally top as far as that stuff goes. And yeah, that's where I'm at right now.
If I remember right, last time when we had the first episode of this Macro Roundtable, I think we talked about like what does a recession feel like and that side of things to be able to connect that dot. But I'll ask a maybe slightly different question today, which is just the mere increased mention of recession in the news. So let's just fast forward, 6 months or whatever time horizon you have in mind, right? And we enter a recession, formally speaking. Just the mere mention of it, do you think that in and of itself will have a pretty material impact on what people are doing and how tentative they are, let alone whether there actually is like a normal, non-emotional based impact to people?
I mean, I think for the most part, if you're in a recession, you feel it. There is probably some credence that just the word and mentioning makes people feel a little bit worse. But I mean, quite frankly, it's hard for people to feel bad right now, right? You look at your 401k, look at your, stock portfolio. You look at your job, you're probably pretty gainfully employed or, not that concerned about losing your job right now. So from those metrics, I think people probably feel pretty good whether you tell them a recession's coming or not. We've been saying, or markets have been saying, and I'll throw myself in there as well, a recession's coming. We've been probably throwing that term around for, 9 months or so at least. And, people just become immune to it, right? They just become numb to it. And they're like, oh, you're crazy. It's not going to happen anymore. Eventually people get over it, and I think it's not going to happen. I think that's probably in the stage we're in right now.
Is that a thing? I mean, is there like, obviously there's like structural facts that exist, right? But is there a little bit of a willpower element that exists here to some extent where like, I mean, obviously people run out of money at some point, right? And there are effects that exist, but is there a little bit of a willpower thing? And how long does that factor into this, the kind of emotional side of things and not just the rational side?
I mean, I'll let Croc answer that, but I mean, there's, sentiment, right? Sentiment's a big thing in the market. I would call sentiment willpower, call it what you want, kind of in the same terminology.
Yeah, definitely. It's, all the market is human psychology and how they're feeling. Are they optimistic or are they pessimistic? I think the market is telling you they're pretty optimistic right now. But like I said, I don't know how much longer that lasts, at least in the near term. But yeah, it's like Shaggy said. I agree. I don't think many people are feeling any kind of pain of recession right now. I don't even think I've really read much about it recently. I think people just get caught up in what's going on right now. And I think a lot of the times, once you start hearing it a lot, it's kind of like too late. Once the news says, "Oh, we're in a recession," your neighbor has already lost his job and maybe had to sell his house or whatever. And that kind of goes along with what I was just saying about how I read an article with a headline of a new bull market. And so, yeah, I think that stuff's just kind of lagging. So I don't know how much of an impact it has. I think it's either going to happen or not happen.
I don't know if I mentioned it before, but it's like that video that we've all seen or many of us have seen on YouTube where, it's the one person dancing at the festival and like kind of dancing by themselves. And all of a sudden, everyone's kind of getting up and following the person and dancing. And you figured out how a movement has formed all of a sudden and the kind of behavioral psychology before that happens. So with the current state that's in mind, in each of your minds, what is the number one, or let's call it 1 and 1A if you have two of them, things that we must watch out for in the near term as it pertains to all things economy. And, this could be indicators, real indicators that are a bit more formal. This could be a bit more informal. What are the one or two things that you think we really need to be watching out for as it pertains to the macro and the economy?
I mean, for me, I'll just pick one. It's probably what the Fed's most concerned about, and that's inflation. So, the Fed is going to continue to be restrictive and tighten financial conditions and kind of put the screws on until inflation is on a trajectory back down to a level they're more comfortable with. So if I just had to pick one, I'd probably stick with that.
Crocked, what do you think?
That would have been my number one as well. But I do have a 1A, and that would be unemployment. I think that's a telltale sign about how the economy is doing. And, if people are unemployed, they can't spend, which means inflation has to come down. So I might even put that above. I might even be talking myself into putting that at number one.
I'm surprised to hear you say that. I didn't think you were going to say that it's number two, but that one's been a little bit of an extra funny one, right? It's like it's murky in terms of reporting, in terms of participation in the market. So I guess for anybody who's monitoring that, maybe as a result of what you're saying, or I've heard that's what's the simplest way for someone to monitor that? In either of your opinions, anything stand out to you, Crocked? If you want if somebody was interested in truly monitoring what the employment or unemployment situation looks like, what's your lens that you take on it? What do you think is real data? What do you think is not as real data? What do you tend to lean on?
I look at the unemployment rate that they put out. I also take kind of like anecdotal data of, the people around me. I think I know a diverse group of people. I wouldn't say I'm too pigeonholed into a certain demographic. And I don't see a huge amount of job loss or anything like that. So I take that into account as well. And just all data really factors into it, consumer spending, inflation, all that stuff. It's hard, like on a month to month basis, to paint a picture that way. But like Shaggy says, more macro over time, you can see the flows of which way things are going.
I'm going to throw a couple extras into the ring here if we can. There's a couple, one metric, for instance, that's been talked about a lot is consumer debt, and the fact that consumers in general, overall in aggregate, are racking up a large amount of debt on their credit cards and otherwise. Thoughts on that? Is that an indicator that's worth monitoring? Obviously, it's tied to employment, unemployment, what that looks like, and certainly savings. It's of course tied into inflation, of course. Thoughts on that as a metric as well? Because that's one that definitely stands out to me, and I've both seen data on and have caught remnants and qualitative information, qualitative data on being a big thing as well. Does that stand out in your minds as well? This kind of thread on consumer debt being higher than normal and rolling?
Yeah, I think it's important. Typically, what you'll see is people draw down their savings and they'll rack up credit card debt, which clearly they're doing now. The levels are continue to increase to really lofty levels. But ultimately, as long as people have jobs, they can pay off that credit card debt, right? So where you really start to see things start to spiral downward is when people start losing jobs. They can no longer make those credit card payments, and then things get difficult. I think one thing I would mention too, as we're on the credit side of things, I think has been a bit overlooked. I think it's going to have an enormous impact as we move into the fall, and that is as part of the debt ceiling negotiations, student loan debt, which has essentially been on holiday since COVID, so people have not had to pay on their student loans. That is going to resume in less than 60 days. They'll start having to make that. So that is another debt payment that people have to make that they were probably just using on discretionary spending or on other things. So that'll tighten screws a little bit as we head into the fall. And that kind of dovetails with a big ruling that we're going to get out of the Supreme Court here sometime in June regarding student loan forgiveness. If you recall, the Biden administration willing to forgive up to, I believe, 20,000 on student loans that have been challenged. And if the court rules that is not constitutional, not allowed to do that, along with then debt repayments on the student's loan side restarting again in less than 60 days, I think that is very significant and worth monitoring on this credit side of things.
Yeah, that makes total sense. I'm going to throw one more thing in here too that you both know I love talking about. It's been one of my big working theses for a while, but it's on like the tech and automation side of things. And so lately, even since our last conversation, we're seeing a heavy rise on the AI side of things, right? AI, everything that's existing for every kind of workflow and situation that exists. But also, I think, Crocked, I pinged you an article recently regarding IRL automation that's existing in restaurants and places like that, right? So there's still this narrative that seems to be growing on that side too. So I'm kind of wondering is there an outcome that exists here where, in the near term, productivity and the economy in general, U.S. economy, maybe even otherwise, goes up, right? Because productivity is so high, margins higher, all those kinds of things. But then there are a lot of people jobless as a result of everything, as a result of tech and AI displacing jobs, and people can have more capacity, and an individual person can create more. Is that a possible narrative? And if so, how does that intersect with here? What are your thoughts on that? We'll start with you, maybe Crocked.
Yeah, I do think that I do envision that being a scenario in the future. Like tech and AI are by nature, they're deflationary. I just don't think it's like an overnight type of thing. I think you feel that it's a little bit, faster. I will admit, I don't eat fast food, but I've actually been inside of a Taco Bell recently and a McDonald's recently to get my wife a Diet Coke. She loves Diet Coke, fountain Diet Coke. And they do like all their ordering. You can go to the counter still, but a lot of their ordering is just by machines, and I had actually never seen that. But they still do have all the people. It almost seems like they have the same amount of people, and they're wasting more of their hours. They're not doing as much. So I don't think it's like completely like cutting into the workforce or anything like that. I think we're a ways from that. I think the AI stuff is a little bit blown out of proportion. Like, I worked as a software developer for 5 years, and everything we did was AI. Now it's just a buzzword. Now it's the cool thing to talk about. So yes, it will continue to advance, and yes, it is exponential. I don't think that it will be able to combat anything we're seeing like at the moment.
So just to take a pause here for a second, for anyone just joining or just listening in, right? We're pulling up here in this episode to be able to see what the current state of the macro looks like, and of course to figure out then how that intersects with Web3, right? So we're going to get there in this episode, of course, but right now we're just kind of getting a pulse on where we're at macro-wise, and as a result of that, how that leads to potential spending and investing, money coming into the Web3 markets, that kind of a thing. So, Shaggy, over to you. What is your thoughts about this whole automation wave? What the acceleration and curve looks like, how that might impact things in the macro? Thoughts?
Yeah, I pretty much agree with Croc here. It is, AI and, it's been around for a long time. This isn't something brand new. Now, ChatGPT and all that, I think has brought it more in the mainstream, people thinking about it more. Thus, we've seen people really throwing money at it, at least in the equity market. It's really kind of fueled the equity rally here. But yeah, I don't think this is anything that hasn't been around. It's just more visible, and things are going to change. It's going to take time, but the computer changed things too. So yes, it does make things more productive, likely over time. But we have demographic challenges in the U.S. as well. So that's and globally, quite frankly. So it's probably necessary anyway.
Yeah, that totally makes sense. And so we've had this shit market that's existed for a bit of time as it relates to Web3, right? It's been a down market. There's been pockets of activity that's existed with, not intended, but shit coins, ordinals, right? Little waves of things that are kind of cropping up, and providing opportunity, which is great, and certainly some continued development in general. Forget about from a trading standpoint, development in general in terms of projects and technology and that side of things. What do we feel like we've learned though in the past 6-8+ months of this climate within the NFT market? Is there anything that stands out to you, Shaggy, on the good side or on the bad side of, I don't know, not to plant a seed or make it biased, but is the market a little bit more resilient than we expected? Are we not evolving fast enough in terms of our project types? What stands out to you?
First off, there's no new money coming in, so it's extremely difficult, a challenging market. But, in markets like these, I kind of take a step back. It's easy to flip and buy and make money when money's pouring in. But times like these where it's difficult, take a step back. And I kind of scratch my head. I'm like, I'm not sure exactly what the innovation is, right? So there's of the projects out there, what's the innovation? I'm a big believer in the blockchain. Blockchain's been around for a very long time. I'm a believer in the technology. I think NFTs have a place. I'm just not sure we've seen the app that really needs them yet, or kind of the app that brings it more mainstream. So yeah, this is a really challenging period for me. I've mostly just taken a step back, and the only I enjoy it. I still like it. I still participate, but I'm kind of asking myself that question, and I don't really have a good answer.
Okay. What do you think?
Yeah, I've admittedly been away from the NFT market, but my, I guess, bigger picture view really, hasn't changed. I think a lot of the innovation that will come to the NFT market are not in the form of these like quote unquote projects, PFP type stuff. I do think that will probably have a lasting, impact, a thing people will want to do, but similar to how people trade Pokemon cards and sports cards, selling something for $1 million should be a once in a lifetime, Honus Wagner card type of thing. And I think just a lot, like Shaggy said, there's nothing really, we haven't onboarded, the everyday customer or consumer to be able to grow it and for people to want to use it. But I think there will be more practical things where NFT technology will be taken advantage of. But I continue to say this is, at that point, the speculation is gone. I don't think there's really much money to make from it. But I think, I think in the near term, I think the first thing to be more widely adopted maybe would be gaming NFTs. But I want to preface this with, I don't believe in play to earn and shit like that. I think just how there's CSGO skins and guns and all that stuff, that to me is an NFT. So I don't see it as necessarily needing a decentralized blockchain for it. But, if each gaming company has their own blockchain and you can see who's owned what and all that stuff, I think that would be the first mainstream use case of NFTs. But I don't think it's like how we use them now. And yeah, I think I don't know anything about the ordinals. I don't know how well they're doing, so I can't really comment on that. But I can comment on the shitcoining, and I just think that's leftover froth from the market. And this just kind of goes to what Shaggy and I are saying, that stuff, if that stuff's still going on, then people must not be in pain. There's no new money coming in, but I think the people that made money doing that stuff are happy to keep messing around with it. So that's how I feel about all that.
Yeah, that makes sense. Let's try to have a little bit of fun here for a second, though, at least in our way. Not that was down at all, because it's just you're saying what you think, and this is the point, right? This is literally the whole point of it. But like everything, like we know, it's not all black and white, and so as we map out and plan, there are different scenarios that exist, right? While the scenarios we just laid out, for you guys, you think are the most likely, there are multiple scenarios in reality that exist here. So can we touch on that for a little bit, and maybe we'll start with you, Shaggy, and laying out a few different scenarios that exist with some weighting, and that plus what's happening in the macro plus what's happening in tech, and how that intersects with kind of the NFT market, let's say. So, maybe if there's like a few scenarios high level that stand out to you.
Well, that's a lot to unpack there. Again, I tend to take a bit longer view, and I know many probably listening here or in the NFT space, a week is a long time to them, which, I hardly even care what happens on a week-to-week basis. It just, for the most part, it's noise to me. Now, that said, I strongly believe we're going to go through a period of contraction in the economy. I believe people will be significantly reducing risk as they always do during periods such as that. So for me, I'm looking to accumulate during that period. You always, the old adage is, buy when others are fearful. And, there's often great opportunities during those times. How that pertains to the NFT market, well, I mean, in the near term, I think the market we have the last few weeks, the last few months probably continues. I mean, crypto isn't really going anywhere. It's been pretty flat for the most part, despite the equity market going up. And as you mentioned, there's pockets of activity within NFTs, and people have clearly made money, but to me, it's just like PvP, right? So for everybody that's one person that makes money, another person lost the same amount, and the fees just eat away at you over time. So it's very challenging to me over the long term. And now that said, if I look a little bit longer, when we are in kind of more stressful economic conditions. Again, I would expect to have some great deals. I mean, to me, I'm buying the things that I think can potentially, again, extremely risky, but potentially last long term. And for the most part, that, as Croc said, is like collectibles and or art. I really kind of focus on art during this period of time. And it's just because I think that use case is established, right? Art, it's for the art. So that said, it's extremely illiquid. You can, most of the things I buy will probably be worth very little. But maybe you hit someone that, it does well, blows up, and it becomes more valuable. But nonetheless, I just buy things that I like. The other thing I'll be looking for is just some kind of innovation. Give me something new rather than the same old. We've seen a million of them, the PFP projects, or whatever the du jour of the day, coins or some gaming asset is basically kickstarting. It's basically kickstarting these projects for people. And, to me, I'm just not that interested in giving people capital without getting any equity in return. So to me, far better opportunities for long-term returns on the equity side right now. Then you have the whole overlay of rules and regulation and what's a security, what's not, et cetera. I think we really need to see how that all plays out. And I think on the other side of it, we'll have a much better space. We'll have less Ponzi. We'll have less scamming. Maybe you won't be able to have the speculation flipping as we do now. But to me, when you can actually start investing in things, that gets me much more excited.
Is there relatedly to what you're saying? So I certainly understand like the main scenario you think is likely. That's very, very clear. What would we have to believe that there's a positive scenario in the near or midterm, for instance? What would have to happen, in your opinion, or is there a scenario that exists where risk on investments turn up in the near or midterm?
Well, I mean, in the near term, they are turning up, right? I mean, they have been. So, the pain trade in the market, it still is higher, as most people are, although becoming less so, are pessimistic. So, so in the near term, I have no doubt that things can continue to move higher. I just think, from a fundamental perspective, things are not improving; they're deteriorating. If you want to believe the market's view, and really the only way to me that let's say we've started a new bull market, at least on the equity side of things, is if inflation can fall down to the Fed's target without the Fed needing to do any more work, or perhaps the Fed even cutting rates. It seems completely nonsensical to me, but this would be the bullish case. If supply chains are healed, let's say the labor market has more supply, but we don't go into recession, and you can get inflation coming down while, like I said, while the Fed is perhaps even cutting rates. I mean, it's pretty much a Goldilocks type of scenario. But you want me to paint the other side of things? I guess that's what it would be.
Does not sound high probability the way you're saying it. Crocked, over to you. What are your thoughts about any scenarios here? Are there scenarios in your mind? Is this very cut and dry in terms of where we're likely going? What are your thoughts?
Yeah, I kind of side with Shaggy. I don't totally see anything bull market-ish happening unless something crazy happens, like inflation shoots down and the Fed starts lowering rates. I try not to overthink it too much. If that's what they're talking about and that's what their goal is, if that starts happening, then I think it might be time to take a look at more stuff further on the risk spectrum. But yeah, I don't I trade Bitcoin, and the volume on Bitcoin is atrocious. It's awful. And that is the crypto asset. And if that's not getting any volume, then NFTs are pretty far down the totem pole as far as what's going to get attention first. So yeah, I don't. I think when it does come, or when the next bull market does come, I definitely think NFTs will probably have their day in the sun again. I don't know for how long. I think about that a lot. How long will new users want to pop back in, or will it just be the ones that were in last time? Will the amount of money be the same as last time, less, more? These are things I think about a lot, and I'm not totally sure. But I guess I just kind of play it by ear and evaluate it day by day. I don't think it's anything near term, so I guess I'm not too worried about it at the moment.
Yeah. All right. So we'll get a little bit more towards the user growth within Web3 and on-ramps and all that kind of stuff. We'll get to that a little bit later. In the meantime, something that's, of course, on everyone's minds, fresh from this week, is the sparring that we saw with the SEC, with Binance and then Coinbase. And what do we think is going on there? And what do we think is the likely outcome and effects of this? Shaggy, thoughts?
Yeah, I mean, clearly the current administration, not a big fan of crypto. You can see that by their actions. That said, what's really missing in this space is kind of what the rules of the road, at least in the U.S. What's interesting, of course, is this is kind of a global thing. So, but nonetheless, I think I don't have the stats, but I'll be surprised if the biggest user base of crypto and the biggest owner of crypto is not the U.S. as a country. So, very important in terms of what the rules of the road here are. There's clearly different ideas of what those rules should be. There are no clear laws except for the securities laws that were passed back in 1933 and 1934. So it would seem to me that it's due for an update by Congress, but I think getting any type of new laws extremely unlikely here, as can barely do anything in Congress these days unless it's a absolute critical emergency like the debt ceiling. So this looks like it's going to play out in the courts. This is going to take a long period of time. These court things don't happen quickly. I think a lot will depend on what the next election cycle looks like, who wins it, whether they become more friendly to crypto, etc. But regardless, however this plays out, on the other side of things, I think we'll have a much better kind of legal framework for how companies can operate and should operate. And I really do think if you're going to onboard the masses, if you're really going to get wide adoption, that's just absolutely critical. There's just way too many scams in this space. There's too much. There's just a massive lack of transparency. You have no idea. There's promises that you have no idea if are true or not, what you're getting, etc. It's just not good for the average person, if that's what we're looking for here. So I do think at the end of this process, we'll be in a much better spot. It may look quite a bit different than it looks today. It's hard to say. We'll have to see how things evolve there. But I think overall it's going to be a good thing. It's just going to take a lot of time.
And maybe if I could build on that too, and take a slightly a different lens maybe on it to some extent, which is maybe from the premise of not just where we're at as it pertains to the SEC, but also just what does this represent, right? And I guess that where I kind of veer towards is this is technological innovation. Now, like you suggested earlier, right? Are there use cases that maybe make less sense and we have to refine and improve and all that? Yeah, sure, like that's the case. But like you said, blockchain is something we believe in. There's a handful of use cases within Web3 that many folks in here, listening now and otherwise certainly believe in, but certainly a lot of refinement needs to happen. And so my thought, and my lens that I take here is, I just view it from the lens of tech innovation, and the U.S. is going to want to partake in things that have tech innovation. Now, obviously, it does have to be regulated. Obviously, we have to account for taxes and all the other things that of course, are of interest and many other considerations, but they're going to want to take a part in it. So something that's going to temper that when it's then going to open up to somebody else and be able to take the lead on internationally, that's where I struggle on a little bit, getting my head around this not landing somewhere better, even if it takes a bit more time. Do you agree with that, Crocked? If you follow my pathway there, that this is innovation tech, no matter how you slice it, and the U.S. is going to want to be at the forefront and in the lead of that?
Yeah, I think so. I definitely hope so as well. I think a lot of this is, kind of what we saw with FTX and SBF. And regulators, I think, might have, messed up. They've kind of moved slow on all this stuff anyway. And I don't know too much about it. I know the SEC, head of the SEC, Gensler, had some sort of relationship with SBF. And so, I think this is kind of like, humans are humans, and you make a mistake and you try to correct it and maybe overcorrect it and be, super strong about it. So I think that's where kind of a lot of this stems from. But I do think that from a onboarding user standpoint, rules are good. Like Shaggy was saying, it's like the amount of scams and, people get their wallets drained. Like, I don't know how any users are going to be able to, want to deal with that. I sometimes would be up at night, thinking like, oh my God, my wallet's going to get drained. And I feel like, I'm, ahead of the curve and kind of up to date on, safety practices and just, technology in general. But I do think, it's kind of a double-edged sword. If you onboard more users, there's in my opinion, and there's more regulation, in my opinion, there's going to be less money to be made. A lot of the money that's made now is because there's more risk. You take away the risk, you take away the reward, and so it's kind of it's good for the technology. But I think if we all look ourselves in the mirror, we all want to make money. So is it what we really want from that aspect?
Yeah, so that's a really dead perfect segue that I would say. So let's look forward a little bit at what that looks like, right? So you certainly have the SEC stuff now, which may result in regulation, all those things you may expect. But then also we kind of have this concept of clean on-ramps, right? So there's no apparent wallets that exist, so it's a lot cleaner. That's one risk layer that exists. The general back-ending of Web3, right? So that Web3 is talked about now, and NFTs are talked about now as if they're outward-facing, right, front end. But in reality, that's just technology, right? It's assets that do something that utilizes that technology. So at some point, Web3 NFTs may go into the back, right? And just may not even be mentioned, not unlike how HDTV wasn't mentioned shortly after it released, right? So it just is the technology that kind of powers it, or it is an adjective to describe it. So what are your thoughts there? As that plays out, any of these layers, do you agree that does that majorly curb the emotional nature of NFTs and therefore the volatility that everyone's looking for? Or are there pockets that wind up existing and things that are a little bit riskier, let's call it, and have more variance? Does the emotional nature play into this? What are your thoughts there? Do we just wind up becoming more investors at the end of the day, and the trading opportunity is a little bit different? Where does this land? Hey, Shaggy, I'll go over to you.
Well, I mean, people trade stocks still, right? It's highly regulated, and you've got quarterly statements. You have all sorts of disclosures and everything that is required. So, just because you regulate something doesn't mean you make the traders go away. I think you get rid of a lot of the scams. You get rid of probably a fair amount of the Ponzi as well. So from that respect, yeah, I think kind of what traditionally NFT folks have looked for and made money on maybe get more difficult. But I'm an investor more so than anything else, and so if you want me to actually invest real money in this space, that's what I'd have to see. I just for the most part play around in this space. Honestly, in fact, almost all my investable assets are in equity markets. So I think it's good for the long term if you're an investor, but if you're just looking for kind of the quick flip, that a lot of us have come used to in the NFT space, I think that'll get more difficult. But quite frankly, it's already gotten difficult. If you look at this space as it is now versus a year and a half, 2 years ago, it's completely different. It is much more challenging to me to make easy returns, regardless of the macro, than it was a year and a half, 2 years ago. So to some extent, I think we'll never go back to that place we were a year and a half, 2 years ago. And that, I'll call it easy money. And it was truly, really easy money if you were in this space. I don't think we'll ever get back to that.
There are other levers, though, that we can pull for a second. So maybe we'll just pull apart the levers to some extent. So risk is down, but there's still supply and demand, right? So collections that are only releasing 1,000 of something that have really good demand, for instance, there's still that lever that exists. There's also the intersection, of course, of technology and, I don't know if it's bots or whatever that intersects with that too to some extent, which makes it more difficult. How do those pieces fit together? Does it still become, even with the supply demand lever that exists, right? And do those, we actually spoke about it. Let me take a step back. So we spoke about this maybe a year plus ago about, and Jinzo, famed MVHQ member, had mentioned there are some there are some projects that are just charging way too much money to be able to mint, way too much ETH to be able to mint, compared to what they provide, compared to the value that they provide or the risk that they provide. But over time, does that wind up getting way, way, way more efficient? And the projects have a better gauge in terms of what they can actually charge. And as a result of that, they wind up eating up more of the value in the value chain, and therefore, if you're an investor or trader, there's not as much value for you to be able to grab. So, by way of example, in a good market, is, I don't know, take like Supreme or take like some brand that's better, like Bathing Ape or whatever. They release NFTs, right? And I mean, their awareness and ability to be able to charge, 3 ETH in their mint or 10 ETH in their mint because they know there's so much demand, and therefore, even as a trader, it's a little bit limited. Or does the emotional nature still stay in this? What are your thoughts, Croft? Is emotional nature always going to exist, regardless, even if some of the value chain gets eaten up because these brands get a bit smarter, or these projects get a bit smarter?
Yeah, I think so. Humans are humans. You'll hear me say that a lot. I think brands now in the physical world, they price things accordingly. And I think, resellers and stuff, they always find a way to mark most things up that are in demand. Supreme charges a certain amount, and their stuff still goes for more on the secondary market. It's the same thing with sneakers and stuff like that. My thing, like, just going back to like once NFTs are mainstream, they won't be called NFTs. They'll just be used for what they are. I think that, like, in itself just says, there's just not as much like speculation in it. It's hard for me to like put this into words of how I view this in the future, but like NFT is the technology, and like you said, we see it as this front end, picture or whatever. It's a technology, and technology is used to make things easier. It's a tool. A technology is a tool. The only reason that we're able to speculate on it now is because people don't understand the tool. And so that's where I think a lot of the money is comes from when investing in crypto and NFTs is, this stuff has real world use case, promising scenarios of use cases, but because it's not current and it's not getting that value right now, people speculate on it, and it's exciting. And then you see the human psychology part come into, like, oh, I'm missing the greatest thing ever. I better buy this ape for $17 billion. I think like stocks are almost like pure speculation. Like, a stock isn't so much a tool. Like, we can invest in stocks. It's a bet on if a company is going to do well or if they're not, and if they're priced appropriately, based on all the different factors you want to take in when investing in stocks. Stocks are not a tool, and so I don't think that type of comparison is fair. So I hope that's kind of like a brain dump of how I see it.
Well, it was a brain dump of a question, for whatever it's worth. So deserving, and it definitely was not that. It was very, very clear. Shaggy, what are your thoughts, man? Where does the supply demand lever, which is always going to exist, coincide with the emotional side or the irrationality of markets and like the opportunity that could still exist and brands getting smarter? What do you think happens there? Because there are always, I will point out, right, there's a lot of precedent for things with that manage supply and demand really, really well, like watches over the past 2 years or 3 years, right? If you could somehow figure out how to get your way in, i.e., bought them in our land, or get on the waiting list in Rolex land, then you'd be able to pick up probably an immediate 5x, 10x kind of a thing. So thoughts on parallel there, and based on where we're at, where we're going?
I mean, I guess I think of it today more like collectibles, right? So, just take Beanie Babies, right? At one point, with the rage, they got extremely valuable. They've gone way down in value. I'm pretty sure there's still value to them out there. And baseball cards, etc., on and on. So I mean, the collectible aspect I think will always be there. That's kind of where I think the art aspect will always be there. Where I just struggle a little bit more is with like a project aspect, right? Because for any company, I mean, just look at like Yuga, for example. For any project to be successful, you need a lot of people using that game or project or whatever it is, right? And for the most part, there is going to be a small segment of the population that's willing to pay up, but that's just not enough people to create a huge project / brand, like the next Facebook, the next Amazon, etc. I don't think it's going to come from a 10,000 PFP collection. I mean, I just don't. That's going to create the next eBay of Web3 or something. I can't figure out what the innovation is there. It's too small of a subset. So for me, at least for the time being, until I see something that's working, when I do buy or sell NFTs, I mainly just think about the collectible aspect or the art aspect, and that's it. And I only buy and sell with money that I'm willing to go to zero on.
Yep. Yeah, we've definitely heard you say that, and I think it's an excellent lens and reminder. So yeah, thanks for saying that. That's really great. And I think I would just kind of maybe sum up this episode where we're at right now. Right, it's of course June 2023. Right, we've had this kind of toss of recession for a long time at this point. We still think it's relatively impending. I think most folks still think it's relatively impending, or very likely. So we have to manage for that, right? Like I think the thread still is everybody still believes in Web3. The technology, the concept of membership tokens, right, that have a variety of elements that exist. I think everyone's still saying that. But we have to manage the market too. So I really appreciate the two of you a lot. I know it's not exactly the rosiest scenario that we're mapping to right now in the near term or midterm, but I think a lot of people need to hear that, and I think then it puts a lot more attention on the technology and the innovation and that side of things. So like always, really, really appreciate both of you coming on today. Really, really helpful. Shaggy, thank you so much. Croc, thank you so much as well. We'll have another one of these in a couple months from now. We'll see where the markets are taking us and what evolution we've had. But thank you again. Thank you, everybody listening live too and listening on recorded. And we'll see everyone. Actually, 3-week break. So Numbers Therapy is going on a 3-week break. We'll see you after that at a similar time. But thanks so much, everyone.